Hello everybody, hope you're doing well. It's Lane here with MetaShackle. Today I'm going to be going over a couple things on the XRP charts and talking a little bit about how the equilibrium zones work as far as my grafting trading strategy is concerned. But let's get into this chart. So this is the live XRP futures chart, and as you can see, we had an incredible run today. As I was going over my video yesterday, I was talking about this weak doji right here that formed on the bottom pattern. And the price action, although it went well past that point, the body of the candles rested right on that weak doji trend line, which is something that tends to happen quite often. And when you are trying to predict bottoms or tops by using weak dojis, you generally want to mark out the side that is away from the trading action. So you can see that this trend line here is actually marking the bottom of this doji. And that's because at the time the price was trading above this. If it was trading below, you would want to mark the top of the body. It generally tends to be a little bit more accurate that way. So that's why it's marked on the bottom of this. But even still, to try and guess where this bottom's going to be, especially for this candle, because at the time there was only one point that existed, so there was no way to put a trend line in here unless you were going off of this line here. In that case, it broke right past that trend line. So by using these weak dojis, they can help you predict these bottoms. This doji here and this weak doji here would be the two that I would be looking at, mainly because there's no other dojis on the pattern. But at the same time, if you center this lower doji here, you can see that it ends right here on this particular wick. And that's something, if you play around with these charts and just kind of look at them, you'll notice that this happens quite often. But as I was saying in my video yesterday, these wedge patterns, especially the descending wedge patterns, generally tend to have 5 waves within them before they break out. And I wanted to show you the example of this is when we were in this first pattern here. We came up for 1, down for 2, up for 3. Now we got our top trend line. We've got 2 points for the bottom, down for 4, and we broke out on the 5th, coming up and setting the top trend line of this broadening wedge pattern that we're now in. But we'll make a few adjustments to this and look at the overall pattern that we're trading in now so that you can get an idea of kind of where we're at in this one. And it might happen in the 5-wave measure just as it did in this lower trend line in this larger broadening wedge pattern. So we've got up for 1, down for 2, up for 3, which gives us the 2 points we need to set the upper trend line of this broadening wedge pattern. We came down to the bottom of this liquidation candle, which gave us 2 points to set the lower trend line of this broadening wedge pattern. We then came back up, consolidated back down, traded down in the area of this weak doji as I was talking about earlier. And as you all know, this morning Trump released his statement regarding the U.S. crypto reserve, and we had this amazing green breakout candle. And this is exactly how it happens, like I was talking about the other day in a video, where this is the time to accumulate since we're basically right on the threshold of extreme fear. And I was talking about how this was a good time to start buying and start averaging into a new position, because one morning you were going to wake up and there was going to be a green candle up here trading back into the equilibrium zone, and that's exactly what happened. Now, I don't know if you watched that video, but I think it was 2 videos ago. But you will see this happen over and over and over again. The time available to buy at the best prices generally don't last very long, so you have to keep your eye on the opportunities, just like anything else in life. When you spot an opportunity, you can't just think about it, you have to act. Now, we have this 5-wave option right here that could very easily play out, and I think that's what we're going to see. And if that's the case, we will take out this all-time high right here at about the 340 level and run up towards this upper trend line of this broadening wedge, which could take us to the $4 plus level, which would be absolutely awesome. But I'm going to get rid of this now. And you can see this is what I call the equilibrium zone. It's playing right in the middle of this overall pattern. Now, even if you're not a trader, This is something that you can do to help give you a better idea of the range that you're playing in. Now, using these upper and lower trend lines, whether it's a broadening wedge, whether it's a descending wedge, regardless of the pattern, the great thing about those patterns is it helps you find a trading range so that you can put your buys and sell orders in, so that you can actually trade and try to swing a profit. But using the equilibrium zone is even better, and if you use this coupled with trend lines, in my personal opinion, this is the best combination of indicators out there. If you don't use anything else but trend lines and the equilibrium zone coupled with these Fibonacci lines, you will see these things bounce around equilibrium, playing below, playing above, playing below, playing above. And once you jump into a new range, you can just sit back a little bit until you can actually mark out your equilibrium zone. And then once you get your equilibrium zone set up, you can start putting some good trades on. But you don't want to do it recklessly. You have to be patient. You have to control your emotions. Now, how do I set this equilibrium zone? Well, for me, it's easy. So you'd be looking for approximately the center of the pattern. So generally, it needs to come up, set the top range, come down and kind of give you an idea of where it's going to bottom out. And then at that point, you can kind of start to see the center. But what I look for are fair value gaps in the center range that repeat. So as you can see here, this fair value gap does not really apply to this area. It's not until we get outside of this range here to the center where this fair value gap presents itself. But if you look farther down the pattern as it develops, you'll see that it correlates with another fair value gap here and another fair value gap here. We now have a huge fair value gap right here. But you get the general idea, because it's like a bullet shooting through multiple walls, if you think about it that way. It shot through this wall, shot through this wall, this wall, this wall. So it's going to correlate. You'll notice if you come down here to do it, it's not going to correlate. So you can see that correlation. And another thing that you will notice is that a lot of times the wicks will tend to play in the range of these lines set by the Fibonacci. Now these Fibonacci lines are basically written right here on the side. You're using the 0 running on quarters all the way through 1, and that's going to be centered in here on the fair value gap in your equilibrium zone. So right here, the equilibrium zone is based right here to right here. Now a general fair value gap would actually incorporate the wicks, so it would be smaller, but I don't use that with the equilibrium zone. I use the top range of the body of the candle and the full bottom range of the body of the candle. Then once you find that fair value gap, you simply just extend it out for the entire pattern. Then you add your Fibonacci lines, and you can see the numbers right here if you'd like to punch them in. These are the same numbers that I always use. Now if the pattern's larger, sometimes I'll add a 7 and an 8 to it. But basically, breaking down in quarters from 0 to 1, the 0.25, 0.5, 0.75, then you're just using whole numbers from there. -1, -2, -3, -3.5. I like to do that half because a lot of times, as you can see, this red area, a lot of times when you're in these patterns, tends to be a nice area where it likes to bottom out before it resets, bottom out before it resets, bottom out before it resets. That works out great for me to be able to catch these nice couple percent gains, couple percent moves. Same thing on the top. 2, 3, 4, 4.5, and 6. So the top mirrors the bottom. You've got your equilibrium zone dead centered right here on the 0.5 mark. Now let's get rid of this line here, this trend line, and this trend line. I want to show you when you look at this chart. Now notice there's no other way I could have done this. Once I found the equilibrium zone, I put the fair value gap in here. Then I overlaid my Fibonacci lines going from the bottom of that fair value gap to the top of that fair value gap, which spread all these lines out, and they just fell where they fell. Now if you look at this, you can see how accurate it is, because when this move came down and bottomed down on the bottom and came up to the top, look where that top all-time high candle went. This is the all-time high that we just set in January. It came right up to that number 6, right up to that green line. Then it fell back down, and we had this huge liquidation candle here on February 3rd. Well, look where it happened to go. It happened to go right down here and do the same thing, bottom of the range. And this happens often, and look how accurate it is. I mean, it's virtually perfect, right on the line, right on the line. Once we traded below equilibrium, we went back up through equilibrium. So equilibrium right here in the dead center is very important to watch. So if you're trading very far up past towards this green line between the red and the green, odds are the price is going to fall back down to equilibrium. When you're trading far off around the red range to the green, odds are it's going to trade back to equilibrium. So you can see as a day trader how using these equilibrium zones coupled with your trend lines and coupled with the Fibonacci lines, how once this presents itself to where you can mark out the equilibrium zone, presents multiple opportunities to set day trades. Even if you were just setting a buy order or something down here towards the bottom, hoping that the price was going to go up, even let's say when price was back here, you can just set buy orders here or sell orders here near this range. In the event that a liquidation candle comes down, it can fill your order, and like this candle did, came down, basically liquidated everybody, came right down to the -5 line, rebounded right back up. So this thing it literally just happened in a day and came back up to the top. Now if you had your order sitting here, your buy order sitting here, once this liquidation came down, it would have just filled your order, pulled right back up to equilibrium within a single day, and without you really doing anything, you could have just sold out for a profit. Basically just trading from here to equilibrium. Now as this line came down here trading into the red, especially when you see these long wick candles, a lot of times these are great times to enter, especially if you're right on top of your game. Put a market order in, or if you have a limit order set, you can get in and basically just kind of sit there and wait for it to go back to equilibrium. But you can take a look at this chart overall and just see how helpful this is for day traders. And even if you don't trade and you just buy coins and put them in cold storage, it can even help you determine the best times to buy more coins. Now we're going to get rid of this so that you can take a look at the equilibrium zone. So it's basically just a fair value gap marked out right here, off the bottom here in the center, and off the top of this candle in the center. And then just extended past the pattern and towards the end of it. And it's at that point that you overlay your Fibonacci's, going off of the top and the bottom. And as it spreads out, the lines just fall where they fall. The only part that you know for sure is that you're going to lay down this fair value gap. You're going to put your 0 through 1 and your quarters, your 0.25, 0.5, and 0.75, center it right here on the fair value gap, and then those lines are just going to fall where they fall. So isn't it interesting how even just using that, it works out to where the top of this all-time high candle and the bottom of this liquidation candle ended up perfectly on those green lines, perfectly encapsulating this entire pattern within those Fibonacci's based on this equilibrium zone alone. Anyways, I hope you've enjoyed this video. I really appreciate you watching. I appreciate each and every one of you. Don't forget to hit that like button. It really helps me out, and I'd really appreciate it. Have a great day.
The sharing of biased and false news has become all too common on social media. More alarming, some media outlets publish these same fake stories without checking facts first.
The sharing of biased and false
news has become all too common on social media.
More alarming, some media outlets publish the same fake stories without checking facts first.
Unfortunately, some members of the media use their platforms to push their own personal bias and agenda to control exactly what people think. And this is extremely dangerous to our democracy.
This is extremely dangerous to our democracy.
This is extremely dangerous to our democracy.
This is extremely dangerous to our democracy.